Okay, welcome everyone. We'll start our discussion. We'll do a bit recap what we learned during the last lesson and then we'll go through our lesson. So please, during lesson, if you have any question, feel free to ask, so we can go through. We'll do a bit recap first and then we'll discuss, lesson 2 stuff. Okay, so welcome. Thanks for joining. As you know me, my name is Anjum Setta. Please, if you have any question, drop me email anjum@university.co.uk and I'll try my best to get back to you as soon as possible. So this week, we're looking at ATHE-IFA-2, understand the appropriateness of the financial reporting framework, which we'll go through. Okay, so what we discussed during last lesson, we'll do a bit recap. So we discussed in last lesson IAS1, we discussed various standards, which is about okay, thank you for confirming. We discussed about how to prepare present the financial statement. So that was in our lesson. In last week, we discussed about IAS1, we discussed about IAS2, about inventory. Inventory should be recorded at cost or net realizable value at cost, net realizable value, whichever is the lower, we record the inventory. We had a discussion in the previous lesson. We discussed IAS 7, International Accounting Standard 7, which is about cash flow. Cash flow statement. We discussed about operating, investing, and activities. We had a discussion IAS 10 about reporting events. The adjustment within financial statement. We discussed 60 about PPE, property, plant, equipment. We discussed about 36. We discussed 37. Contingent asset, and we discussed IAS 38, impairment and goodwill treatment. So all these international accounting standard we discussed, and we discuss about ethics. Ethics are the moral principle, and we discuss about PPCIO, which is easy to remember, popular people chat in office. And we had a discussion about professional behavior, professional competency, confidentiality, integrity, and objectivity. That all was in our last lesson. So this week, please be looking at our L2 and please what you know about the financial statement. So we prepare four types of financial statement. We had a discussion previously as well. Statement of comprehensive income, or we call profit and loss statement. Second statement of financial position, is also known as balance sheet. Statement of cash flow and statement of change in equity. Now what the key which we'll go through in our lesson today. Okay, so please, this is our indicative content, what we're supposed to go through: fair value adjustment, reporting, understand the financial statement, the role of sole traders, partnership, limited company if you want to start a business, and allowances for doubtful debts, adjustments. So all will be discussion, and we'll refer back to according to the handouts, some specific questions those we can go through. Sometime, that's always good to do a practice. But most of you have the background accounting, so hopefully, so you already know the things, and we can go through accordingly. Okay, so guys, we can think about, we discuss about the limited liability. Limited liability, like, we have nobody really claim for personal asset as a company if you want to register it. So we can register the company in the company house, and company has the limited liability. So that's which we can. Okay. Then we can think about, so assess the application of the financial reporting framework, and we can look around different, businesses we can look around. So please, if you want to set up the financial statement according to IAS 1, International Accounting Standard 1. So please, we have a few headings, the standardized, harmonized system of accounting and reporting through the world. So we can think about the revenue will come first, cost of sales, gross profit, and all other expenses we can minus. And if we are preparing the financial position, we can think about the asset, the layout we normally follow. This is IFRS, International Financial Reporting Framework, and standard and the layout which we follow. So we can look around the revenue, the cost of sales, gross profit. We discussed last lesson qualitative characteristic about financial. We should have the 2-year comparative figures which we can. Distribution cost, we can add them and we can allocate, the costing and expenses, and the major heading administrative that we can chart to distribution. Okay, so this we can look around the distribution and the expenses, and we can chart. So the profit can be before operation, profit from operation. It can be before interest and before tax and after tax. So we can show in the financial statement. So we can look around the asset, non-current asset come first. With the asset which we can use number of years, like property, plant, equipment, intangible assets. So that's, according to IAS 1 and International Financial Framework, we follow this layout. So current asset come, then the current asset, then we minus current asset from the current liabilities, and we can look around. And then please, equity figures, we show equity figures, non-current liabilities, which is long-term liability. We look the current liabilities, total liabilities, and total equities should be equal. Net asset always equal to equity figure. So please, we can follow this layout, and that's the way we need to be adjust, our income and expenditures in the financial statement, and we need to show. So we had a discussion, qualitative characteristic in financial statement, all the relevant information, all the material information should be included in the financial statement. Faithful representation, complete, neutral, free from error, and comparability, timeline, verifiability, and understandability. The key these should be in our financial statement, and 2 years financial information. All the material information within 90 days, after signing, there should be domain on the public domain, the financial statement. So all this is quite crucial, and we should say the notes in the financial statement, like, all the explanation with the policies of the accounting, like, IFRS, IAS 2 International Accounting Standard, like if you're adopting first in first out method, or FCO, last in first out method, is not allowed anymore. So all the policies and other accounting policies we need to be make sure truly reflect and consistently follows in the financial statement. Depreciation and disposal of assets. Depreciation method under IAS 16, property, plant, equipment, either straight line, diminishing or reducing balance method. So please, the carrying amount of the asset should be reflected correctly in the book of account, which will look, some numerical question as well. Review the depreciation charge and disposal. So please, when you dispose of any asset, so we need to be make sure that reflecting the carrying value of the assets, we need to be look around the residual value, the end value of the asset, and useful life. So we need to be revalue our asset according to fair values. And Okay, because bad debts is one of the other areas which we need to be reflect in the financial statement. Trade receivable, which we call debtors, and the creditors, these is trade payable, and the recoverable debt, and the sale ledger control words we also using, so we can minus these, and we need to be make sure we make the adjustment. So please, we need to be make adjustment accordingly, doubtful debts and all others. So these are the double entries we can please when you do, and when you make adjustment in depreciation and bad debts, always follow the double entry rule, which is that click what goes on the debit, the expenses, asset drawing and increase. When these increase, we do debit. When decrease, we do credit. Opposite debit is a credit. So click please, we can liability is credit, income is credit, capital is credit. When these increase and these increase, we do. Okay, please. Then we have accrual and prepayment according to indicative content, because we do all these accrual basis concept. It mean every year's income and expense related to that year should be. We not do based our accounting and the cash accounting. We do accrual basis. It doesn't matter you make the payment or not the bill, but bill is related to that period. It should be included in the expense. If the sale is a happen, even though you not receive the money yet, but the sale should be recorded as a sales, as an income in the book of account. So we can look, say the increased expenses, we do debit, and when need to be in financial position. So if it's accrual expense, it means expense incurred, not being paid, like, the such as we can think about gas electricity bills we use and year end and the 31st December, it should be included within that year, because that is even not being. So we debit the expense and credit the accrual, which is a liability not being paid. So prepaid expense, if you paid like car insurance advance for the next 3 years on the 31st, let's say 1st July, you make the payment for whole year car insurance. So, and your year end is the 31st December until 31st December. So first you do the debit entry as a expense debit and credit or cash, because we make the payment, and then you can do the credit the expense related, and the prepaid expense we do debit, because the expense will be credit. We have to reduce the expense related to that period. Prepaid is known as an asset, even the money is holding by the insurance company, because it's not related to this period. It should go in the next accounting. And the please accrual income is always, which is opposite of expenses, and we need to be accrual income. Income earned but not being paid, it's a receivable income. So we can say income is a credit, and we do debit, is trade receivable, which is means sale ledger control account, and prepaid income, which is a liability. You receive advance, what you not provide the services is a liability, like a construction company. You have received the money as a builders, and if the money not, and you not really construct, not and start the work or not, other proportion of it we need to be make sure. So when you receive the money, so you do debit the cash and credit the sale, then you need to debit the sale and credit the because sales we need to reduce it, and we do credit the liability, because it's the prepaid income is a liability, prepaid expenses is the asset, and prepaid income is a, so liability is a liability, because we are liable if we not provide the services, we have to pay back. Okay, please, if any question, always when we do these adjustment, always good to be timeline, when you start, when you have finished, what related to that year, please you need to make adjustment accordingly. Okay, then please, we as we discussed, it's been summarized here, accrued income, accrued expenses, which side of the statement goes and adjustment. It's just a basic, the double entry bookkeeping. So please, then we have different types of errors. Those we need to be double entries bookkeeping. It should be dual effect. Sometimes is a missing. We need to be track, and these errors need to be adjustable. Some errors is can't traceable, like the error of principal. Maybe you treating as expense, actually was asset. Expense will reduce your profit, will save the taxes, but it's not true and fair information. And that's, we need to be make sure of reversal. So please, we need to be adjustments according to in the book of account. And that's, because error of commission, error of omission, these are different different types of errors, and we need to be make adjustment in the book of accounts, which will go through some numerical in our assignment discussion as well, as you've been given. And always think about the dual effect, what the entry will be, and we can make so error not deductible. Some errors it can't be deducted in the trial balance. Please, we have to be, it's not mean your balance sheet is balanced. It means it's correct, but it can be logically, maybe you're treating as a liability instead of income and vice versa. So those we need to be make sure we do. Suspense account normally is the account which we create the temporary, the previous period adjustment, we making this and temporary account, and the reversal which we can. These suspense account won't goes in the final accounts. We need to be make sure we'll make the adjustment into. Okay. Next, please 2.2, which is analyze the strength and the weaknesses of the financial, the framework of the preparation and the presentation of the financial statement is set out the concept by the financial statement for external user. We follow the International Accounting Standard Board rule, International Accounting Standard, International Financial Reporting Standard. The framework deals with the objective of the financial statement, the true and fair, and the qualitative characteristic, timeline, comparability, materiality. All these, we need to be make sure it's, and the definition, recognition, and the measurement. And always think about measure reliably. We can treat asset if we can measure reliably, and which will flow the future economic benefit into the business. Then we call asset. If we have broken chairs and we can't really, and that's not anymore asset. The goodwill of the company is being. We need to be make adjustment in the book of accounts. Please, if any question you can ask. I like to ask. So as we discussed, the financial statement IS1 is about the true and the fairness about the financial statement. We can look around the circumstances, the management conclude the company IFRS interpretation would be misleading. It shouldn't be misleading. It gives the true and fair information. The objective of financial statement, they can make people make the decision. They provide the financial position, financial history of the company, and they can rely on the stakeholders to do these to make the economic decision as well. Interested party, those are really interested in the financial statement. These are all stakeholders, really, equity investors, existing lenders, implied stock market, in a list, they need information. The business, the contacts, including customer, they need, because maybe you're giving guarantee to the customer income, you don't have the sustainability or going concerns, so we can look around tax authority and general public. Okay, next please. If you want to work toward the merit criteria, which will go through the financial ratios, please, compare and contrast the reporting about the financial performance. So please, the financial statement, we can look around the financial ratio. So please, we can explore about the profitability, liquidity, and use of resources. These are the financial ratios, 4 categories of ratio. This is the example we pick, we have the separate handout for this. If you want to go through, please, we can look around, which is available on our Moodle page. Okay, so I quickly show you these, the handouts. These are available. Please, if you look this one handout, which is available, and you can find, and you can pick the question from the handout, please. So, like, it's good to be for the sake of a little bit, polish your to revise your concept, which we discussed. You already learned about some. Okay, so please, it will go to consolidated in, but this is your chapter 6. Second, guys, just show you 5. Okay, so you will see there these are the financial statements and interpretation. Okay, so please, chapter 6 of the book, which is about the ratios. Okay, so if you look here, like, we can calculate the ratio for the to meet the criteria. Yes, you can, please. So whichever you want to, that's no problem. You can use it, example, as long as in meeting, the GDPR, general data protection regulation instead of, the clients and things. So please, that's need to be keep in mind. Otherwise, though gross profit divided by revenue, we can look around administrative and lead. So please, you can pick some examples which we can discuss about the ratios and separate handouts. And then please, you have the model answers for these as well, which is available in chapter activities as a model answers. Other than that, we have the Kaplan, Osborne, and all others. So please, if you want F7 exam, which is available on Open Tuition, you can download the free booklet, which is already available on our, couple of we already uploaded already on the Moodle page. So please, those you can use as well for the sake of your learning. Perspective. Okay, so please we can look around here. The two Anika and Papika. Anika's for the 45% gross profit, other was 52%. The operating profit was 9. So difference between 45 and 9, rest was the operating expense. And those are overhead expense. So we can think about how we can reduce the performance. Gearing ratio, the high gear is mean high risk, which is indicate, and the formula we use and figures we can pick from the statement and we can calculate. Based on the profitability, and it is for peak is better, uh, operating profit for peak is better, but when we look the gearing is very high, gear is for peak is a high risk company. So if it is a high profit beta, the beta high risk factor, higher returns should be, but we need to be think about, how much risk we can bear because the profit difference is only 2% and the risk difference is it's a huge difference. So our interest cover ratio is 11 point. This is less risky and this is more risky. And we can think about the liquidity ratio, current asset versus divided by current liability. So that's 1.22 because we have £1 22 pence worth of asset against £1 worth of liability, and this company only have 65 pence of asset against £1 liability. So we can think about this is more risky than others. So please, we have included some the company performance. We need to be not only looking the performance based on the ratio, but we have to look around other economic factors like at the moment base rate is dropped down to 4%. We can think about in the way the political, economic, social, technological environment. That's also very crucial, which we need to think about. Horizontal analysis, we can do vertical, horizontal, the same side of the company. Industry average, we need to be look around what average the companies earning and their profitability and ratios we can compare with, and we can decide. That's also quite crucial. Sorry, please. So we need to look around the business strategies. Maybe we can draw and make the strategy like the cost leadership, differentiation, cost focus, according to the potent generic strategy. So we can think about what the future. So please, always good to be if you download any company's annual report, they indicate what their future plan. So, because these are financial and non-financial information is very important in making the decision. So that can be argued in your assignment. So please, the statement, the user of the financial statement, the user of financial statement, and they can make it various financial decisions. They, like investor can decide. Sorry, public and various others are the government bodies like HMRC can decide, the taxes being paid fairly or not, So these are different decisions can be. The information which we calculated two companies ratio, and based on this we decide, and you're recommending And Paprika is better than Anika is better than Paprika, even profitability. Paprika is higher, but the risk factor is too much. So we not suggest, in terms of you invest in Paprika. Anika is less risky. Anika, the difference between the profit is very low, but maybe in the following years, because the risk factors mean they borrow money more, they have less their assets, and ultimately this leads to the more risk. The return according to the risk is less, so we suggest Anika is better option to investing in Paprika. So these are examples, please, which we can, and recommending questions you've been given from 364, which we can look around in and please recommended links are available. And if you have any question, you can drop me email and we can go through. Okay, so please, the question ratios and all of this that the manuals, you can pick any question, and when we do assignment discussion, we look numericals, and we can say, okay, you can pick this, whichever question you like to, and you can explain them. Why is the ratio important? What type of ratio? So if these are other factors other than the ratios, the interpretation of ratios, and making decision according to by looking the external environment, that is very crucial, not the ratios itself. So that's all from my end. If any question, please you can ask. Otherwise, we'll keep up to here. Thanks for attending. Any question? Hope if you like to ask. Okay. So please, the manual and the booklet is available. Other than I'll share with you on okay, quickly I share with you here in the chat box as well. If you not allowing me to share, what I can do, I'll share with the. Sorry, I can share with you now on in the chat box. Yes, so I'll share with you here these two as we discussed. So that's two handouts which is available on our Moodle page, and I can share with you the Kaplan. So Kaplan F7 exam paper, which is all quite similar resources we can use. Please use it to use. And you can pick in the questions if you want to. Okay, so I shared with you, please. You can download. Okay, okay, no problem. I'll share on WhatsApp group as well. So you can download from there, stay there. And thanks for attending, and have a lovely weekend. And next lesson we'll go through our LO3. Thank you. Bye-bye. Thanks for attending. Hello.